Okay, testing, 1, 2, 3, testing, 1, 2, 3. The rain in Spain falls mainly on the plains. The ants in France stay mainly in your pants. So let's see how bad the lag is today with YouTube. Is it 10 seconds? Is it 20 seconds? Is it 30 seconds? Is it 40 seconds? We'll see. I'll wait for you guys to respond. But anyways, happy morning. Welcome to Trade Non-Farm Payrolls Live, month 171 in a row. Yes. So thank you, FX Street, hosting us 171 months in a row for this one particular webinar. But I've been doing work with FX Street for well over 180 months. But this particular one, 171. So how cool is that? Thank you, FX Street, for being wonderful hosts. And of course, thank you to our moderator for being here today and making sure everything goes smooth as silk. And I hope to be tough as nails. I need to check why my AC isn't on. Hang on. Under the bridge downtown. I could not get enough under the bridge downtown. All right. Never mad at the fact he's corrupt like a senator. Sold in a rope, but you treat it like soap in a rope. All right. So anyways, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but cheer up. And stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. It's very nice to meet you. Hello, ho, extreme close-up. Hello, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Throw your diamonds in the sky. Thank you, Traders Way. Boop, beep, beep, beep. Now, Traders Way is a foreign exchange broker, and they would like to earn your loyalty and respect. Just give them an opportunity. That's it. They're asking for an opportunity to earn your loyalty and respect. So visit TradersWay.com, open up a demo account. The link is on the, I think, bottom right-hand corner. Take you about 12 seconds to get into the back office. You'll see it's nice and clean and organized. You can download MT4, MT5, C-Trader, I think, is another option, a few other things. But do this. Download MT4, let's say. Place a few trades on your demo account, and you'll find out the execution speed is fast, the spreads are narrow, and the swaps are huge. TradersWay.com. World-class customer service, too, if you care about those things. All right, let's see. Let's move all this over. Wow, this resi is a little different than the other resi. La, 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 la. Under the bridge downtown. I could not get enough. I'll close that. All right, cool. La, la, la. Cool, right on. Everything's here. I'm checking out the platform. Everything seems to be running fine. Very nice. So good morning to you. I hope everything is all right in your life, that you and your loved ones are healthy and safe and even happy. Things are very challenging. I know my children have run out of video games to play, and my son might even start Call of Duty Ghosts. And I'm like, yeah, that's actually a pretty good one, son. You should do that. Let's see if I can get the chat to post inside of the video stream. Let me see if I can do that. Chat box. Open. And no, it won't let me. Source. Oh, no. Weird. This app always opens off screen. I don't know why this app does that. All right, so no chat. Yeah, come on, there should be a way to chat. Sorry, just come on. Well, I guess I'll just leave it. I'll just leave it. I'm getting distracted. Once again, hang on. It is unbelievably hot in here. Hang on. Yeah, it's crazy. It must be incredibly hot already because it's very hot in the room here, and I have it at 71, so I just dropped it to 68. Forced the fan to stay on. So anyway, sorry about that. All right, so here's the agenda today. We are going to be here for 3 hours, a 3-hour tour. And over the course of 3 hours, in the first half an hour, I'm going to get us set for trading non-farm payrolls live because that is the title of the webinar. The second thing, the second half, we will focus on the market's response to the news, and I'll try to make sense out of it, both technically and fundamentally for you. So we might get a trade opportunity, and also we'll try to take the opportunity to explain what it all means, okay, based on macro. Yes, we can do gold and oil and Bitcoin and stuff. And then in the third half of the presentation today, I will simply answer your questions. Okay, so I've been trading pretty close to 20 years. I have a macroeconomics degree from Harvard. Let's go, buddy. I'll do my best to address your questions and concerns. Pretty cool? Does anyone second the agenda? Now, the next thing is to ratify last month's meeting minutes. So last month we got together and economists around the world on television and newspapers who might actually have a drinking problem thought it would be like a horrific number, and it came out actually a good number, and they were like a million miles off. You couldn't have been, if you were more wrong, you would have been closer to being right. It's sort of like you get some point on Earth where if you go any farther, you actually get closer to home, right? Like that's how bad that was. So now they're expecting like a great number. Oh, it's going to be so great this time. Whatever. I think the number actually isn't that important because they're going to be so way off. We don't think the economy is getting worse, and that is the whole point. And really, we're probably about 14 million people unemployed. A couple of months ago, it was 22 million unemployed. So things are bad, but they're getting better, and it's that change in the rate of change and the direction of that's important. So, no matter what comes up today, I think is a little bit backward looking and is also a giant guess. So think of it this way. I don't know if the government is fully employed. I don't know how many people there are working right now at the Bureau of Labor Statistics. But was it yesterday was the first day of the month? Yeah. So yesterday was the first day of the month. So they spent what? All yesterday crunching these numbers for us today? Like whenever you hit an early NFP like this, the revisions are almost always ginormous because what they do is they just throw a dart at the board and come up with a number. They must call like their mom and their friends and they're like, hey man, what's going on in the economy? And they come up with a number. And then they spend the entire rest of the month actually gathering data to get like a pretty decent number. So maybe what we do today is ignore the headline and look at the revision for last month. But did you guys see the revision on ADP? It's really strange because I don't typically look at ADP revisions because there shouldn't be any. But this time there was, and it was really huge. So I don't even know how ADP can have a revision. But let's just say the numbers right now are pretty gobbledygoo, which is a very technical word in economics. And so I think what you should do is boil this down to whatever your fundamental bias is for global macroeconomics. Of course, that's all you're ever supposed to do. So here's how you do that. You think COVID-19 is going to get worse. That borders are going to shut down again. Cities are going to shut down, then states are going to shut down, and then entire countries are going to shut down. All along the way, economic activity slows, right? The woman at Applebee's loses her waitress job. The woman at Supercuts loses her hairdresser job. And they don't spend money because they don't have any money. And the economic activity slows fast and hard and fast. And not just in one economy, but let's say several economies around the world. And from that, we can create fundamental biases for currencies because that affects the flow of money across borders. And what we actually do is we trade currencies, not just the currency, but the change in the value of the asset, right? There's an appreciation and a depreciation for a currency based on which way it's flowing. So in the beginning, flowing will reverse, and then flow will stop. So reverse is fine, you can make money. So if things are good, CAD-Yen goes up. If things are bad, CAD-Yen comes down. Okay, I can trade the flow no problem one way or the other. There's always a bull market. I'm either bullish on CAD, I'm bullish on Yen. Always a bull market unless money doesn't flow. And we might get to a point where, see, if borders shut, people are going to need money. They're going to need cash, right? Because maybe they lose their job. So how are they going to buy food? Cash in the bank, okay? Cash already invested, not cash they haven't made yet. If you've lost your job, you live off your savings, right? Well, what if you live in a country where your savings are outside the country? You bring that home, okay? That's why the currency appreciates. Let me give you an example, okay? Let me give you an example. When COVID-19 hit the world, the Indian rupee got very strong. Why? Under the bridge downtown, I could not get enough. So let's see, about 10 seconds has gone by. Anybody? Anybody? And I don't know what that means. Why did two people put that? Is anyone going to answer the question? Neutral. Is the microphone even on then? When COVID-19 hit globally, why didn't the Indian rupee get strong? Thank you. If I ask a question and you don't know, type in a question mark so I know if you know, or if I know you don't know, because then I can change the answer so it's very educational. That's right. Wynn's got it. Steve Wynn's got it. Because in India, people needed their cash. So they brought money back home to India. So that means they had to convert their money into rupees from wherever they had it invested. We don't know. It doesn't matter. The money was invested somewhere outside of India. Okay? Or maybe their sons and daughters in the Silicon Valley sent money home to help mom and dad. Whatever. Either way, the money was flowing to India. Okay? And converted into rupees, which means the supply of rupee went down, but demand went up. And that means the value went up. Okay? You see it? They converted back. Right. Thank you, Mohit. Now, Does India tend to be an importer or an exporter? I know, giant questions, guys. Giant questions. And where'd my drawing tool go? Let me get my drawing tool fired up, and we can bust out this conversation. Volume's low. There you go, Luca. Yeah, mainly exporter. Okay, cool. So a strong currency, is that good for an exporter or bad for an exporter? Amol says both, of course. So the way that we handle that, oh shoot, it's down here. The way we handle that, because of course it's both. So an economist, if I can get my pen to work, okay. An economist looks at exports minus imports. Okay. And of course, the full equation here is C plus I plus G plus net exports. Exports minus imports is the net, right? All right, so that's what we're looking at first and foremost. So if you export, if exports are greater than imports and the value of your currency goes up, then the thing you are selling to the rest of the world gets more expensive relative to all the other currencies in the world. Now, the price in rupees hasn't changed. The value, the expense of buying a rupee first gets more expensive. So that's bad. So after COVID-19, what happened to the US dollar? Did the value go up or did the value go down? I'll remind you, the stock market dropped 30% in like 2 weeks. Did the value of the US dollar go up? Or did the value of the US dollar go down? Yeah, it's amazing when people get it wrong. I'm like, wow, you're not paying attention. It should be absolutely clear. Okay, yeah, the dollar skyrocketed in value. US dollar went way up. So what happened to the US dollar? Somebody was buying it. Who was buying the US dollar? Yeah, Speed Racer's got it. Like, up, like, a lot and fast. Like, how could you get that question wrong, right? Like, wow, you got to really go back and look. Don't get mad at me. I'm not being pissy. I'm like, you're not on the clue train, so you really need to double down on your research. I mean, look at your chart, for example. Okay? Dub got it too, yeah, but that's taking it to the next level. So somebody was demanding dollars because we know when demand goes up, right? When demand goes up, the value goes up. So if the dollar went up, demand went up. Cool. So what does this have to do with India? At that particular time, the Bank of India increased their foreign exchange reserves by the most in the history of the bank. What do you think they bought? The Bank of India held more foreign exchange reserves during that period than any time in the history of the world. Maybe. Honestly, I don't know. I don't talk to the Bank of India that often, although I think it'd be really cool. Okay, but it's pretty easy to assume that India bought US dollars and put those dollars in the bank. Now, why would they do that? What's the purpose? What's the purpose? What's the purpose of buying all those US dollars? Why would India do that? They're trying to help out their buddies, America? It's a fact. All Indians love Trump. Because now India converted their rupees into dollars, so now the supply of rupees in the world, in the foreign exchange interbanking system, globally, India dumped their rupees on the market and demanded dollars. It got to the point, actually, where the Fed had to step in because there was a shortage of dollars in the world. Thank you, Maida. Maida is the one that pointed that out. There was actually a shortage of US dollars in the world, and the Fed had to step in. Countries, not just India, but countries around the world were buying US dollars as fast as they possibly could. There wasn't even enough dollars available. But that means, in India's case, what was the Bank of India trying to do? They flooded the world with Indian rupees, demanded dollars, put the dollars in their bank, but now we have this increase of supply of rupees globally, and the value of the rupee went down, which is a good thing for India because they export, and the price now in rupees has stayed the same, but the price in other foreign currencies, so other countries buying stuff from India, the price of Indian goods in local dollars, what we call relative dollars, fell, which keeps Indian products competitive with cheap Chinese crap. Drop the mic. We're done here. There's so many things going on there, but I'm trying to show you the flow of money and how these things work. And the point is, this isn't non-farm payrolls that's going to make or break the currencies today. I don't care what the number is, okay? Really. Because those trends are already in play. That's what matters. What PPI, CPI, PCE, GDP, all these things, the only thing that it matters is what is the central bank going to do next. Not now. And by next, I don't mean this meeting. I mean the meeting after this meeting. You must be, let's say, with fundamentals, I'd say a solid 3 months in advance. Sav says these Indians are clever. I don't have a stupid Indian friend. It's amazing. One of my friends, he retired at the age of, I don't know how old he was, 24. He came in from India, super smart, got a great job, super smart, super successful, retired at 24. And he was trying to figure out what to do with the rest of his life. What a nice thing, right? And so he's sitting there, and by the way, I knew him when he was a kid. I knew him when he was younger than 24. He'd sit in his apartment listening to Led Zeppelin and Pink Floyd, right? And so anyways, here he is. He's like, he's done. He has so much money, he's done with his entire working career. So he's like, what do I do with the rest of my life now that I'm 24 and done? So he's drinking whiskey, and he's like, well, I like whiskey. So anyways, I get Whiskey Spectator, Whiskey Advocate, I think it is, magazine. And he's in the magazine, featured article on him because now he makes his own whiskey, right? Like, that's just one of my buddies. And that's amazing because that's an amazing story, but I got a lot of amazing friends that can also do stuff like that. Me, myself, I still, I don't know. I've been at school for 5 years, so. Indians are very smart. It makes you scared. Well, just be smart too. Okay? That's the wonderful thing about, like, in particular, like immigrants, where they come to a country like America and it's all opportunity. All you have to do is have a ridiculous, sickening work ethic. That's it. So you kick ass. That's all you do. So you show up, you're like, look how rich this damn country is. It's stupid rich. This is retarded. Even the poor people are rich, but they don't know it. They don't know it. They sit around bitching and complaining about being poor all the time. Like in India, no one gives a crap. You just die in the street and someone pushes your body out of the way. So you know what? You're in a country like this, you work your ass off and you take care of your family. And then boom, good things start to happen. Right? So anyways, that's why Indians kick ass, because they've been to India. Right? Like, but that's why you have immigrants come in, because it's always been that case where someone walks in and says, what an amazing opportunity. I can really further my life and make the lives of my children better. I can give them more than I got. And that's what you do. And you work your ass off. Anyways, apologize for the French. So I love immigrants, because I'm an immigrant too, of course. Happy Canada Day, everybody. All right, so I guess we'll watch Euro Dollar or something today, or maybe we'll do this other thing. Let's go around the world. All right, so like I said, I'm a huge fan of fundamentals, okay? The only thing matters is what the Fed is going to do in like September, October, November. And by the way, the closer we get to November, the less likely the central bank's going to do anything. So let me say it again. The only thing matters fundamentally is what the Fed is going to do next. And the closer we get to the political election, the less likely they're going to do anything. So to say it differently, once again, is whatever they're doing now is what they'll do till the end of the year. So you have to discern whether you believe that's up, down, or sideways for you. That's your job. That's your fundamental analysis. And everything else, quite seriously, just news. I like news too, but news is just news. News will add short-term volatility, all that kind of stuff. And I don't really care about news anymore. And the reason for it, when I first started trading, like when I did Non-Farm Payrolls Live #1, the very first one at FX Street, 171 months ago. And yes, that's more than 14 years ago. But back then, the reason we chose Non-Farm Payrolls to do this webinar is the news would come out and you would gap 300 pips. And then it would drop 150 to 200 pips. And then it would rally 2 or 300 more pips. And then it would drop 150 more pips. And you could, if you were like spot on, right? If you just bought and held to the top, you'd make 1,000 pips in an hour. Now it moves 32 pips and stops. Okay? So trading news, you can do it, of course, and it's a very short-term, non-fundamentally, non-trend-driven response to new information. And sometimes the new information is important, like the Fed might consider it, but most of the time the Fed's already made their decision. So ultimately, beyond, let's say, what happens in the next 2 hours, it just doesn't matter. Okay? So Mr. Pickle Slicer, or Slicer, Mr. Pickle Slicer says, so what about today? So the news is going to come out and it's going to be an okay number. It's already priced in. It's already backward looking, and it's very, very likely to be wrong and revised hard. So maybe what we do today is look at the revision from last month. Okay? But there is almost nothing that could happen today that would change the Fed's decision for between now and the end of the year. Okay? And that's the real question. Okay? Now you could say, well, what if it comes out negative 20 million jobs lost? Okay, yeah, that would have an impact. The thing is, if you look at how they gather the data, I mean, if you did your own basic research, you'd understand that in the last month, in the month of June, we didn't lose that kind of jobs, right? You know what I mean? You'd have to do your basic research and say, well, we actually haven't seen that data. Not, okay? Now, maybe you're in Florida or maybe you're in Texas and you're like, things are getting really bad right now. Yeah, but that might not actually be in the June numbers. That might be in the July numbers. Okay? Kemi's trying to say she doesn't see that, so, but, okay. Oh, okay. Well, thanks for coming in and insulting me in front of our group, Joshua. Appreciate that. But then, how about this? Then stop scalping. But, yeah. So anyways, going back to that, there's just really fundamentally nothing really truly likely to happen that's within the scope of reasonable. Okay? The number is probably going to be positive, whether it's 3, 5, 2, 1, 0, negative a million. All of that will not really change what the Fed's going to do. Okay? Now, JSL wants to know about the stock market. Well, where else are you going to put your money? Let's see. The Fed's not going to buy any more bonds. We know that. So who's going to buy bonds and drive up the value of bonds or drive down interest rates? Nobody. The Fed's not going to drive it negative, and they're not going to buy any more. So who's going to drive interest rates negative if it's not the Fed? By the way, the Fed doesn't want negative, so they won't let you. So the long story short is, will the Dixie get strong, or will the S&P 500, if you want to kind of take it out to that other thing, will that get strong? Well, you have to ask, well, who's the buyer, right? And there may be no real other opportunities besides buying the stock market because the Fed's policy is designed to drive up asset prices. Okay? Does that make sense? So dollar index. If the dollar gets strong, they're either buying, the foreigners are either buying U.S. treasuries, but now there's no reason to front run. Right? There's no reason to front run. And the second thing is maybe foreigners want to buy the stock market, but the stock market's at all-time highs already, so who wants to buy it even more? Well, maybe there isn't another opportunity at the moment. So I don't know. So that's going to come up to your decision making. Typically, here's what I see, if you want the answer, right? Okay. If the stock market rallies, then that's a sign of risk on. And when you see that, the US dollar typically weakens. Okay. Cool. Okay. There's the spread on gold. So whoever said the spread on gold is huge, there's the spread. That doesn't look huge to me, my friend. So please stop heckling. Okay. Okay. Now, when I started trading, for example, pound yen was something like, I think it was close to 18 pips. So everything, all spreads look tiny to me now. So maybe it's just me. Maybe that is huge, but that doesn't look huge to me. So that doesn't prevent me from trading. Sometimes, of course. Well, that's the market. If you're trading in it at times and the market's illiquid or even closed, I don't even know when you're trying to pull the trigger, then yeah, the spread's going to be higher, but that's the interbanking system. You have to remember, Trader's Way actually puts your trades into the market. They don't, there's no like A book and B book where they're trading against you if you suck as a trader and all that kind of stuff. Like during the financial crisis that the Swiss National Bank created, FXCM USA went out of business, Alpari went out of business. Why? It must have been because they were holding all those trades instead of entering them into the interbanking system. Little tiny Trader's Way was not affected at all because all their clients' trades were in the interbanking system. Why would that affect a broker? It wouldn't, if they had actually executed your trades. So if you say on Trader's Way sometimes gold spread is $2, it's because you're probably trading at times when the market's illiquid. So therefore that is the interbanking spread. That's what you get. You're either trading when there's no liquidity because the market's cold, or there's no liquidity because the market is hot, right? You're trading 1 second after a major news event. Well, then you shouldn't be doing those trades anyways. Okay? So anyways. So if you find your spreads are high, you're trading at the wrong time. You're not trading, in my humble opinion, properly, honestly. Irregardless of who. But let's just move on. So anyways, if you're a bear on gold, that's kind of what you're looking at. But what I was trying to show you here is that's not a giant spread. It's tiny. What is it? 69.5 and 70.5. Yeah, it's about 80 cents, 75 cents. Oh, right on, Speed Racer. Well, you know, Speed Racer, I've been doing this for so long. I've been in every moment of the foreign exchange market for 20 years. Like, I've been through everything. I've been through multiple crises, multiple collapses, multiple ends of the world. So, yeah, I have a few battle scars. Right? I have a few battle scars. So I'm happy to share. And just one thing also, I don't really care what tools you guys use to trade. Like everything that I use, you don't have to use. Like you're like, Wayne, these pivot points are stupid. I'm like, okay. Or you're like, Wayne, your moving averages are stupid. So let's say we look at this. And you say, Wayne, this chart's just too busy. And Wayne, I don't believe in oscillators. Wayne, this RSI is dumb or stochastics is dumb. Okay, cool, right on. Doesn't matter to me. You can get rid of all these things. What matters to me is that you somehow, some way, make a decision of whether you are a long-term bull or a long-term bear. And I don't even really care how you do it. You can use pure technical analysis. So you can look at a monthly candle and say, well, oops. You can say, as long as we're above this, I'm a bull. Huh, right on. I don't care. After that point, like what I want you to do is make a decision. I honestly don't care how you do it. You can get to the point where you simply flip a coin and say between today and December 31st. You flip a coin, I'm a bull. Done. Good enough for me, honestly. Because from there, you can filter through all the noise and all the information and simply look for good trades that agree with that statement. So if you're a bull, let's say, I don't even know what the bull means. So a bull on Aussie yen. So then if you're a bull, here's what you do. You ready? Every time you're interested in trading, you're trying to look for the first one. Number one, is the market bullish too? That means you need to see higher highs, higher lows, higher highs, higher lows, higher highs on whatever time frame. This is a monthly, but you can do it on a weekly, daily, and intraday basis. So if you're buying a dip at the London Open, great. You're a bull, and you're never, ever, 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 ever going to sell. Because you're not that good yet. You will be someday, but you're not that good yet. Okay? Then two, now you need to look at sort of like the technicals, right? So for example, you only buy and you only buy dips and you only buy dips at support. And that only happens, of course, when the market is bullish. If the market's not bullish, you don't do anything. And when the market is bullish, okay, and you get to this point where you may not trade even half as much as you used to, but now you only buy dips in a bullish market. And we know, I know that you know, I've asked the question enough times, I know that you know if that's the only thing you did, you would be profitable at the end of the year. Hey, Mr. Highvolt. Hey, Carlitos. Okay. Okay, you see what I see? See what I mean, guys? So anyways. So I don't really care what the tools you use, honestly, and what sort of techniques you use for kicking down doors and putting ammo into targets. I don't really care the technique. Left foot, right foot, doesn't matter to me. Okay, so I'm not preaching a certain indicator, a certain technique, a certain way. I'm imploring you to make a decision. Is it really? So I keep getting this, it's too low. Let me change something over here because the microphone's practically in my mouth and it's a big mic and a big mouth. So, all right, so I turned that up a little bit. How do we pinpoint the dip we cannot see in the future? That's what technical analysis is for. You just, okay? So that's what you're supposed to be learning next, let's say. So let's move this to Euro. See, lots of people misuse technical analysis and they're trying to get the charts to tell them what to do. Okay? And therein lies the problem. The charts do not tell you what to do. The charts will tell you, with the proper techniques, the right price, because these are prices, and the right time. But you have to make a decision. Okay? So, for example, if you were a bull, you'd be looking for higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. And these higher lows occur at support. So someone said, well, how do you know like the timing of all that? That's what you're supposed to be doing every day. Not trying to figure out what you're going to do today. I know what I'm going to be doing in October. You understand? Farham wants to know if you should use buy-sell stops to get into a trade. No, that's dumb. Okay. Try Fortnite, not Forex. Okay, you see what I mean? So that's now the question with technical analysis. You already know what you're going to do, and you know you're looking for higher highs, higher lows, right? Higher high, higher low, higher high, higher low, higher high. You see? What's going to happen next? Someone said, how can you predict the future? Tell me what's likely to happen next. You're going to look for a higher low. So what you might want to start with in your trading education is something called price action. Okay? You might want to start with that. And what price action is when you're at a higher, when you're at a higher high, when you're up here, what you do is you look left and say, what's the old higher high? Remember, we're just up here. And you drag this across, and you say, somewhere around there, I want to be a bull. Okay? Then you buy it here, and it goes up. Then you find yourself at a higher high again. So you look left and say, well, that's the old higher high, so I'll drag this across, and somewhere around there, I want to be a bull again. And sure enough, okay? And you do that over and over and over. Okay? Alex says, why do I prefer market orders? I just like trading. But do I never use limit orders? Am I anti-limit orders? No, I use limit orders a lot. Okay? But I do like trading, so I'd much rather pull the trigger. I love pulling the trigger. It's just part of my art. But if I can't be there, yeah, I'll use limits, sure. So anyway, so you look at this, you're like, Wayne, this is stupid. These pivots are stupid. I'm like, okay, don't get all upset. Don't get all pissy on me, right? People are like, Wayne, the only thing you need is price action. I'm like, okay, fine. Well, ultimately, it doesn't matter. What I'm trying to have you do is filter this. So like if you're a bull and you're like, Wayne, there's way too much going on here. Then I say, okay, well, let's simplify this. Let's look at a bullish point of view only for next week. Cool. So if I'm a bull, this is what I'm going to do next week. You ready? I'm done. There's my next week's trade plan. Thank you. It was great being here. I'll be at the, no, right? Like drop the mic. I'm done. I want you to learn how to simplify. I don't need you to have so many lines. Let me give you a conservative target, by the way. And, okay. And here we go. Based on what's happened so far this week, if I was a bull, okay, I want to buy a retracement somewhere around 112.50, and my target is 113.50, my conservative target. Okay? Done. That's it. I'm done. There's my plan for next week. Okay? Now, if NFP drives us up here or drives us down here, well, tomorrow's Friday, and then I have Saturday, and then I have Sunday. I can revise my plan. Don't worry about it. But that's it right there. And this becomes an old man easing into a hot bath. Which one? Mine. The basic ones. So all these weird, silly pivots they have now, they've been invented after I've been using pivot points. My first set of pivot points I had to have manually programmed for me to put into the deal book trading platform. right back when GFT was what I thought the preferred broker. So I was with them for many, many years. And so many of their customers were boot campers that they asked me, they called me one day, Wayne, everyone is asking for your pivot points. Can you give us the code? And I gave them my CTL code for free to help people trade better. How cool is that? There was also a time when I did so much trading with GFT that I had my own NFA regulated and audited dealing desk. There was a full-time trading staff at GFT only to clear my trades. And the NFA honestly regulated. They actually flew out. They wanted to talk to the actual people. We had rules and regulations and procedures only for me. So for example, if a trade wouldn't clear, what phone number do they call? Even if it's in the middle of the night. And how do they record it? Both to on their own books, but also to keep the NFA involved. And then specifically, which phone number do they call me to wake me up and inform me? Right? How cool is that to have your own dealing desk staff? Pretty cool. And so they had to have multiple people to clear my trades 24 hours a day. So they're right. And like, pretty cool stuff. What's the phone red? Wouldn't that be great? So anyways. La 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 la. So there's euro dollar and there's my plan. So now someone else, we're talking about the price action part. So on the shorter time frame now, okay, now we can do things like this. Bottom, so let's call that a bottom. Bottoms are not really great places for bulls to trade, but bulls want to look for bottoms in case they produce higher highs. And then, right, then a bull is going to look for a higher low. So they look left and they say, well, somewhere around here would be an interesting place. And they got their higher low. Then they find themselves up here at a higher high. So what you do is you look left and you're like, well, I don't know, somewhere around here, there's probably going to be a higher low. And if so, if you buy there, you're expecting, you don't know if you'll get, but you're expecting in the future a higher high. What do you think? Talk to me, Goose. Oh, we're only 3 minutes away from the news, so let me go to fxstreet.com. fxstreet.com. It's like the street, but FX. Under the bridge downtown, I could not get enough. Under the bridge. Oh man, I need to call Joseph. Under the bridge downtown. I hate getting songs like that in my head, huh? So thank you for being here. Trade Non-Farm Payrolls live, month number 171. I think that's 14 and a half years of me doing this one webinar. Thank you very much for being here. Thank you to our moderator for moderating better than any moderator has ever moderated. Thank you to FX Street for being such great hosts. And I'd like to thank you personally for the loyalty and respect you've shown me all these years. So I've been presenting at FX Street probably closer to 16 years, I guess. Speed Racer wants to know fundamentals. You can go to Harvard, or you can go to fxbootcamp.com and pay $400. $382. So Ojo thinks a lot. Great. All right, so here we go. The number, what will it be? Actually, YouTube is not that old. I've been doing Forex longer than YouTube's been around. Looks like we're waiting for Lotto. And the first number is at 22, followed by an 18. Trade balance, good trade balance. Nice big headline. 4.8, sweet, right on. Good, better than expected, great. Wonderful. What I'd like to know, and I'm not sure if they put it here, is the revision. So we might have to get our own revision, right? May revision added. What? No. That's the June preview. So anyways, let's go to Bureau BLS. Yeah, 4.8. Thank you. $4.8, 11% has been. See, I want the revision, so I need the actual. See, we need better. We need more detail than that. Is that right? What do you mean by the prices are cheaper now? You mean the Golden Rock has deals? Wait. 1%. Unemployment persons fell by 3.2. Anyway, I don't have time to go through the revision. Can somebody get the revision number for me? So FX Street's probably posted it. But I'm actually very close. You know, I might actually swing on by when I can, world. The world is yours. Under the bridge downtown, who could not get enough. La 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 la. La 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 la. Okay, so you got to remember 12 and a half. Okay. NFP revised higher. All right, so a couple 100,000 more. Thank you. I appreciate that. Bottled water prices. What part of Nevis are you in? So that's all good. Dollar's weakening. That's very, very good. Super happy with that. Yeah, boy. It's all good. Just paying attention to the key levels. See, they're hitting this. So bulls are doing what the bulls have done what the bulls have wanted to do. The bears are doing what they're doing. anyways. Yeah, well, that's just risk on, right, Speed? So you feel good about, okay. Oh, okay, cool. Yeah. So this would be indicative of risk on. It's just when consumption goes up, Speed Racer, consumption for everything goes up. Well, like JCell already explained, like it's not going to change the Fed's policy. So, anyways, oh well, okay, you missed it then, because this has to do with the Fed policy. And by the way, like you say, I mean nothing, but I mean something did happen, but this is just like what you would expect. So the world is yours. You know, I'm thinking more like, you know, let's say out near Awali, it's quiet. Although I think right around the corner, if you're on sort of the Lovers Beach side of Awali, I think you're much more exposed to the hurricanes, but I'm not really sure. New Trader says gold. What do you think? Well, this would be acting exactly like gold. Okay, you guys have to simplify things, right? Now, this is actually funny. So I open it up and it's not that way. So that's actually kind of interesting. Just a little bit overvalued right now. So that's actually a little bit surprising. But it's overvalued, so. How about Euro Yen? Once again, it should be, you should already know all of this stuff. I'm showing you Euro Dollar. So what really matters is if Euro Dollar can maintain above this line, that's why I drew it there, then, for example, Euro Yen will be up. Okay? Gold should be up, but it isn't now, but it's getting sold off as an overbought asset class. But we're watching this right now because it tells you the direction of USD CAD. If Euro Dollar's up, USD CAD is down. If Euro Dollar's up, you know, pound Swissy maybe is up, but then pound's getting punished for being the, you know, for Brexit. So all of this is all standard correlation based on their relationship to risk. So like Bitcoin trying to go up. Yeah, that would make sense. That's a risk on play like the one we're planning. So in that case, if you were going to look at Bitcoin, oops, I got this listed twice. WTI gold. Well, let me change this one back to Bitcoin. Okay. So if you were to play the likely correlation as a result of a good non-farm payrolls, right, your trade plan should look something like this. And we should be on our way through 10,000 in July. Okay. The opposite would be something like this for the month of July. Okay. But right now we're just working with what we got. This is the support. And bulls buy at support, and bears are not supposed to sell at support. And the news is good, so it would absorb at least short-term risk, at least short-term. I mean, we don't know by next week, but okay. So now, for example, we could look at Euro-Yen. Okay. If you were a bull, that's what you'd be thinking. We don't know if you're right, but that's what you're thinking. So there wouldn't be much to do now, and that's the other part of like waiting to trade around news events. This was a good trade down here. Okay. Oops. That's a good trade in there. And you can see it's right around support, right? So when that occurred, that was a decent trade. So in the hour we're in now, even if you're a bull, it's kind of like a really dumb time to be trading. Don't you think? Like, irregardless, I don't care if you're a bull or a bear. That's like a dumb time to trade. And in particular, even if you're a bull, you're buying this like right at resistance. So it's like, what's happening to Euro-Yen? I'm setting up either tomorrow's trades or next week's trades. So here's what I'm supposed to do as a bull. You ready? Let me show it to you. Let me break it to you gently. Oops, let me cut this down a little bit. Break it to them gently when you tell my mom and dad I'm trading Euro-Yen again. Okay. That's what you're supposed to be doing here. Really. I mean, sort of almost literally at the end of the day. Now, if you bought this sort of like London Open, jammed your stop and let NFP run, that's different too, but whatever. Let's look at all yen pairs. All yen pairs. All yen pairs. So here's my Kiw-Yen. How nice is that? I'm in at 69, so I'm up about 120 pips on this. Just a pissy little swing trade. In theory, I should be taking profit around 70 and a half. Okay. You can see my entry, really boring entry. Up, 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 down, down, up, 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 down, down, buy. Up, 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 down, down, up, 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 up. What's going to happen next? Down, down, and then hopefully some up, up, up. So most likely, I'm just going to let this run all this week and all next week. And if I'm lucky, all the week after. And I'm done. But you can, I want to show you the logic here. This is support. And then this is the higher high, off support. And I bought the higher low. Cool. Now, before, okay, what did I do in here? What did I do in here, guys? Yeah, I went to the beach. I took my family to the beach for a week. Beach house. Now, the reason I went to the beach house that week is I said there would be massive profit taking that week. followed by an incredible loss of volume and volatility. How many people would agree with that? That I told you weeks in advance, not minutes or hours or days. I told you weeks in advance that that one particular week will lead to a massive profit taking, followed by a complete loss of volume and volatility. How many people state that that would be factual? Now, I didn't tell you I was going to go on vacation because it's none of your business, but maybe, just maybe, my actions were a learning experience. Like I actually boom, did something like that. Okay. Now here's the next interesting thing. Was I long or short this market before I called the profit taking? Was I long Kiw-Yen market? Was I a bull? Was I a bear? Or was I neutral? Mohit says long. KJ, long. Yep. Since when? Since the Fed said no negative. Since that period. Okay. Now, let's dive into this a little bit more. When we were here, how did I describe what the month of June would be like? So we're in May here. This is May. In the last week of May, how did I explain what June would be like? What was my descriptive words? June would open hot and fast. And hit targets early. Jim already said hit targets very early. Okay. And Mohit says before NFP. What I said was between the Wednesdays. There was, so between the Wednesdays, you had NFP on the Friday, and you had the Fed meeting on the Wednesday, right? And that was this period here. Oh, yeah, and then the sideways last longer than you would expect, which was about almost 3 weeks. Huh. So the Fed said they weren't going negative. June would open hot and fast into massive profit taking and then consolidation. So, magic? No. Fundamentals and behavioral psychology? Yes. Or behavioral finance? This had to do more with the behavioral finance aspect of trading. See, you have to understand there's quite a few, there's like trichotomies. Forget dichotomies. There's the market, there's the economy, And then the subset of the market really is traders. Now, there is quite a little bit different. So like my understanding of June opening hot and fast was the behavioral finance aspect of it. So to take that out, we'll say behavioral. Okay, and that was my understanding that successful traders were going to need to take their profits and go on vacation. Now, you might not have known that I was going to take vacation, but I said successful traders that have already made their money, they're going to drive up, hit their targets in June, hit their maximum expected target, take their money off the table, walk away, and not even participate. Not even look back. You're like that baseball player that points out to the bleachers. And the pitcher starts sweating. He throws a pitch. The batter not only hits the ball, drops the bat and doesn't even watch it in the air, just starts walking to first base. Like, I hit that bitch out of here 10 times into the parking lot, right? It's like that kind of thing, like take the profit and not even turn the back. Hey, by the way, I've only seen one cricket game, India versus Pakistan. And the batter points his bat right at the bowler and then points out to the outfield like, I'm going to crush this out of the park. And he did. And it was like the world stopped. The universe stopped for a second. And I'm like, this is awesome. And you should have seen my friends just like out of control. Out of control emotion. So anyways, so this had to do, and then this so that's the massive profit taking. And then in here, I said it's all the dumb traders. They're going to try to force their trades and make money by losers that still haven't made their money back from the big crash of February. Now they're going to like scramble to try to just get back to break even, scramble to make their bonuses in this period. And here's the thing, it's idiot versus idiot. That's why it went nowhere. How many people remember those stories? Again, I'm just trying to plant the knowledge in different parts of your brain, and I'm wondering if you remember the stories. Because I break them down and I try to explain them from a human point of view, that this is humans behaving in a market or creating a market because their outlook for the economy, all of which are different things. Quarterly, and then of course year end, yes. Okay, now here's the cool thing. Here's the last day of the quarter and the first day of the quarter. Then we're game on again. Right? So anyways, I'm just trying to plant seeds. And none of this has to do with what your MACD told you. Now, if you have plans and then you use technical analysis, you'll do a lot better because you will have to filter it out. So very often people throw oscillators and their guru says things like, oh, it's so easy to make money, eh? You buy at the bottom, you sell at the top, you buy at the bottom, you sell at the top, you buy at the bottom, you sell at the top. And then they show you a PowerPoint presentation where that worked sometime in history. But then you do it yourself and you're like, wait, that doesn't work. Okay? Stephen Wynn says, so what's the plan with July? Well, I already told you. If you're a bull, that's that. It's not complicated. You want to note if you're a bear? Yeah, Michael. So I'm a big fan of behavioral finance. And that's what that comes down to. So we know there's a market, and the market is like 6 to 12 months, depending on the asset class and the market, but the market in general is 6 and 12 months in front of the economy. Okay? Okay? But there's another component here, because that doesn't explain why volume drops at Christmas time. That doesn't explain why on election night in the United States, the market is going to jump. That doesn't explain why in July, for example, the market is quiet. That doesn't explain why the March-April border is important. It also doesn't explain seasonality, which is all of this is part of, nor does it explain macro cycles, like the real estate cycle, like the business cycle, like the political cycle. None of that is explained by the market or the economy. So in my humble opinion, there's a third part of this piece. Okay? And that's traders. It's humans. It's behavioral finance. Okay? It's humans. Humans are involved. Humans are gathering data about the economy and making decisions in advance of the news. Okay? And greed and fear and other human activities get in the way, which then affects the economy, which then changes your decisions, which impacts how you behave, which affects the economy, which affects your decisions, which impacts the way you behave, which impacts the economy, which impacts your decisions, which impacts the way you behave. Behavioral finance. Okay. Javier, I don't have a favorite behavioral finance book. So, like technical analysis, even fundamentally, I'm self-taught. Okay. Cool. So we're looking at Kiwi. Let's do a different one now. Let's do Kitty CAD. So the Canadian dollar, how did we do this one? Well, we have support. This is a buy pivot. So I'm a bull at support, kicking off a buy pivot. It makes a higher high. What do I do next? I anticipate a higher low. I throw in the next buy pivot, which is here. And I say, okay, so I'm up here. If it drops back to this zone, 178.5, I'm going to buy, which I did. Okay. Cool. What do you think? So now you know how to plan your family vacation next year. The last 4 years, I've taken almost a month off. Well, let's call it a whole month. The last 4 years, not including this year, so the last year, the year before, the year before, and the year before that, from about the Fed meeting in June, so right after the Fed meeting, I took an entire month off without working. So guess what? This year wasn't any different. Under the bridge downtown. Okay. Cool. Neat, right? I know a lot of you have had this before, but is anybody having a little bit of an aha moment where maybe some piece of information is helping things click? No, Michael, the June Fed meeting is the beginning of summer. People make their money and they go away. I used to say, you know, you go on the, you fly to the Caribbean with your mistress. But that got me in a lot of trouble. Honey, why are you so upset? Janine's my secretary. Well, you can't see the full interbanking volume, but you can substitute, Ed. You can use volatility for that if you wanted to. It's not quite the same, but if you wanted to try to see the entire market, see, like when you throw down this volume, that's really just the volume from the liquidity providers, which isn't the full market, okay? So you could do it that way, but another interesting way that would capture based on what the candles are doing, you could use volatility to substitute for that, and where do they put it here? Oh, Bollinger Band is trend. That's pretty funny. So you could do it like this if you wanted to. I'm going to make these dark gray and make them fat. They're already fat. Okay, cool. And you could use that for volume. Okay. So you see the times of higher volume And then from around here, it goes lower volume. Okay, you can see the bands were wide and then narrowed. Okay. Okay. And so, but because this is based on price and not actually volume from the liquidity partners, but price from every market participant, you could use these volley bands as a substitute. It's not true, but it's reasonable. Okay, look at this. No volume and volatility. Low vol, high vol. Cool. So right now you can see, since I exited the market, right, the bands have been narrowing, which is volatility dying. Okay. But this is the volume from liquidity providers. So let's say Trader's Way uses 12 liquidity, 12 LPs. I don't know if that's true or not. But let's say you use 12 LPs. Well, that's the volume from the 12, but there's more than 12 globally. It's just enough to execute these trades that go through Trader's Way. So, right. But the charts are the charts. So you can say, right, in this time period, in this period here, from when I exited to now, volume, right, wait for it, has waned. But on the first day of the new quarter, volume is starting to pick up again. And when you see volume pick up, these bands will widen. So this one is trying to turn north, this one's trying to turn south, which means on the exact day we discussed, the beginning of the new quarter, volume has returned. Very cool. Exit, return. Okay? And do you think the first day of Q3 is a coincidence? No, of course not. It's no coincidence. So I don't think we're going to get massive volatility in the next week, though. Let's be clear on that. Okay? Okay? So I think vol and vol will be low for the next 6 weeks. Okay? Now, on top of that, if COVID gets worse, and by worse, I don't mean people dying, I mean the market's closing. If COVID-19 gets worse, aka states close their economies, which is much more impactful than people dying. Then I will then reverse my opinion and I would buy dollar. Okay? But I don't care about people dying in the case of being a foreign exchange trader. People die, that's really sad for their friends and their loved ones, but it has no meaningful impact on the economy. Okay? If 10,000 people die, it won't impact the economy at all. You close the borders, millions and millions and tens of millions of people are removed from the economy. That matters. That being said, if 10 million people died in the United States this month, yeah, that might have a meaningful impact on the economy. But we're not talking about people dying. Okay? Because if 10,000 people get COVID, they're still playing PlayStation 4 games, they're still watching Netflix, they're still ordering things on Amazon. Okay? That's not me being mean and cruel. That's me being an economist and a trader. I'm trying to discern for you What will matter as far as your trading is concerned? So after that remarkable non-farm payrolls, I'm up another 30 pips. Crickets, boring. Whatever. Who cares? Adam says they don't. What doesn't work? So let's take a quick look around the world. Take a look at WTI. So what's going on? Yen weak, so that's good. Canada gaining some strength, that's good. Euro neutral, that makes sense. Aussie neutral. Pound strong right now, Kiwi strong. So I didn't buy the pound because I actually don't like the pound, but I bought the New Zealand dollar and I'm making money on it. Thank you very much. And Swissy weak to moderate, so that's okay, but yen is bettered, okay? And dollar is weak, but also gaining some, probably that gold move or something, but nonetheless, Kiwi is the strongest, yen is the weakness, and I'm long Kiw-Yen. Thank you very much. Yeah, you can see that. Money is not moving to Europe, it's moving to England. Under the bridge downtown. Interesting. Okay, so it's not really tanking. So let's take a look at the plan for the month. Okay, it's not tanking. I mean, you guys have to put things in better perspective. And I know this is pound, you're talking euro, but it's all the same. Okay, there is a sell zone that exists here. Okay, there's a buy zone that exists here. So, bears will sell here or they'll sell here. And I think they actually prefer the higher one. So don't be shocked if you see sort of like, if you're a bear. Okay? Because up here, bulls exit and bears enter. Right now, this is up for NFP, then down for NFP, and who cares? Okay, cool. So let's clear all this out. What you're supposed to be doing is identifying support and resistance. And so as far as I'm concerned, the trend we have in play right now is this. It's not tanking. It's at the top of the range. How do you use indices? You match strong versus weak. Okay. Yeah, Raymond says Swissy seems to be struggling. You know what? I haven't even been paying attention to Swissy for quite some time. Right? So I don't get that far in the analysis. Okay. So we got that. Gold getting its bounce. So we collapse through the I walk through the hills 'cause she knows who I am. She She sees my good deeds and she kisses me softly. I never wanted, now that is a lie. Okay? So we tickled 113 and collapsed. Yeah. Uh-huh. Cool. So now we're back at 112.50. Is this a meaningful price? I never want to feel like I did that day. Take me to the place of love. Take me all the way. Huh? Is that a meaningful price? Yeah, we'll do a czar. Yeah, we'll look at that. Do I utilize it? Yeah, I do. Not very often. It's not needed very often, but sure. What's up, Gary? Gary, you're going to be Gary Risk On like forever now, huh? It's pretty funny. There was a time when you were just Gary. It would be, Michael says psych level. I would call it a midpoint psych level. But put it in the context of something we've already talked about today. Average true range? All right, good. I would rather use standard deviation, but your call. What did we talk about earlier today in regards to euro dollar? That's right on, Gary. Oh, the days when Gary was just Gary. The cool thing about Gary Risk On is it means grow if you use the acronym. And it makes sense. So no one remembers. Okay, let me put it back. I see, yes. Yeah, I see what you're saying on that. All right, swing trading bullish. I never want to feel. Do you remember this one now? And then I went to this, and then I added the conservative target, and I put that down. Ba, 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 ba. Ba, 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 ba. And now let me highlight this for you. Ba, 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 do. Take me all the way. And I don't ever want to feel like I did that day. Take me to the place of love. Take me away. Yeah. Bow, wow, 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 wow. Wow, 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 bow, wow. Bow, wow, 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 bow, wow, wow. Love me, I say, yeah, yeah. Look at that. Now, do you remember? No, I know, Brad. I know where it came from. But I understand also that he's changed his name on YouTube, which is good. So the world is yours. Is what's, as far as hurricanes concerned, what is the Awali Beach area like? If I was up on the side of the hill or even down by the water. I know that part of the island is beautiful. I know it's quiet, but is it worse over there in regards to hurricanes? Right? I know if you go past Lovers Beach and towards the airport, I think that is much more prone to bad weather. But if you're on the Owali Beach side, right on, Grow. Is that right? That's beautiful out there. Oh, to exit. Oh, I see. You had to get out of that. Yeah. Yeah, St. Martin's nice. How do you get my pivot points? Go to metatraders.com. 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 It's $5. $5. Is standard deviation used by professionals? No, it's statistical analysis. It's not at all a self-fulfilling prophecy. It's simply statistical analysis. Is there a coupon? Yeah, for the $5. Yeah. St. Martin is still smashed? Wow. Right. I know the airport would be as bad. Yeah. Depends on the direction. Yeah. All right. So I should be on like the south end of the island, but that's windy out there though too. Though. It's a problem about being on an island. It's windy. It's hard to smoke cigars. I had a good moment though on Nevis with a cigar. I was at the Four Seasons, God forbid. Anyway, so I was at the Four Seasons, and I was hanging out by myself, as I often do, because all my friends are virtual. So I'm hanging out, and I had this nice steak and lobster meal at the restaurant, and it just started raining a little bit, and there's this kind of little courtyard near one of the pools, and this is right next to the big house. And there's some nice little gardens and a tree overhanging. It was just this light rain, just enough where you can't be outside. But I got a cigar from AKA the Library Bar, which is not really a library bar. And I sat outside and under just the umbrella of this beautiful tree, I sat there and just this light mist, and it's totally black, dark, and at night somehow the moon was still out, and yet it's raining, and it's a tropical rain, so it wasn't cold. And I'm talking like this was December 29th or something. And enjoyed my little cigar there with a little cocktail, sat there all by myself. Where can I get your price based? That's coming next. So whoever is a client of metatraders.com will get that free in the coming months. And that looks like this. Okay, so you can see this is a breakout of that. So if you were a bear, you'd be very interested. So these sideways pivots are based on market, and the trending ones are based on trend or suggest trend, or these are outliers, so a potential change in trend. So if that happens next, you'll see the stats will change, because what's going on with this? So I had this is a custom indicator. And what it's doing is it's looking at all the data like a scatter plot. So you have all these data points, data points, data points, data points, data points. Okay? And then it looks at the average price. Okay? And then it looks at the change in average price. Okay? Because as you measure the average price, and then the trend in average prices, you get different things. So now you want to measure the slope and the relative change in the slope of the average price of the data set. So you do the y equals mx plus b, m being the slope. So slope is equal to rise over run within the data set. So now you're looking at, when you're looking at the change, you look at, how much rise is there over run. And then, of course, as you can see, every time there's a new data point, the average changes. And therefore, if you throw in the M, your rise over run changes every time you update the data, because the average will change. And you want to know, is the average changing bullishly or is the average changing bearishly over the data set? Okay, B being the intercept, because when you're measuring the stats, you're doing it in quadrants. So we're moving from this quadrant into this quadrant into this quadrant, but down back into this quadrant. So you right? So you want to know where you are, where does it intercept, what is the slope of the intercept, and so on and so forth. What is the slope of the average trend? And from that, you're basically creating pivot points. And you'll say, well, Wayne, that's not really how pivot points are calculated. What you do is you look at the weighted average, which is a weighted mean, of the last period, which is a data set, and you look at the highest, the lowest, and then from that you look at a standard deviation, right? So now you got one standard deviation above and below the mean. So this is S1, R1, R2, which is 2 standard deviations from the mean, S2, 2 standard deviations from the mean, and then you calculate the midpoint between the two. You calculate these midpoints, and now you have pivot points, which means ultimately pivot points are also based on standard deviation from a weighted mean. Okay, but they don't incorporate slope, so they ignore the rise over the run of the mean. So I said to myself, hey, that might be interesting. If I knew the rise over the run of the weighted mean as a moving average, then I can then calculate the standard deviation above and below the mean like a pivot, and then 2 standard deviations above and below, and therefore I get these lines. Does that make sense? Simple statistics. So it's my own indicator. I just had it, I paid somebody and they calculated it for me. Okay. So this is the 1 standard deviation above the mean. This is 2 standard deviations above the mean. This is 1 standard deviation right below the mean, 2 standard deviations below the mean. But the most interesting part is the change of the slope in the average of the data set. So what does this mean now that we're below it? Well, first of all, they're outliers. It almost never happens. But when it does happen, very often it can change, because now it's changing the mean, and this is way below the mean. So the more we add it, the more likely we're going to change the slope. And the slope might be from going up, from going down, because it's not actually the rise. So it might actually now be a negative rise over the run, because it's more like 3 standard deviations below the mean. So it would change the mean from, let me try to actually draw it properly. The mean, the current mean might be like this, and let's say in the next hour the mean will be more like this. Okay, because you're adding and deleting data points along the set. You can use linear regression. Well, there's actually 2 things going on if you want to go that way. And of course, you can do anything you want, right? So there's another way of doing it, and let me show you that. Okay, I just wanted an automated process. So you can measure this data set this way, okay? And then you can go into here and you can get this now going and measure that same data set, and you get something like that. which is telling you something similar but different. This is one standard deviation is what it's telling you, right? And then the other one is doing this, okay? And it's giving you wider. I don't really want wider, I want more accurate, but notice that that's 2 standard deviations from the mean, okay? Okay? Yeah, right on, Gary. Well, I'm trying to teach the math. See, how many Forex gurus out there can actually do the math? Very few. Very, very few. They're like, oh, I love MACD. Well, explain the math behind MACD. They can't do it. Oh, I love stochastics. Great. Explain the math behind stochastics. How does stochastics actually work? They can't do it. How do you do standard deviation? How can you calculate standard deviation of a data set? See, I did that at Harvard. Like, I actually did the math. I can actually do the math. Most people can't. It's not that they're, right? So that's it. So I can try to teach you what the math means and how it's trying to develop it and what the indicator actually says. And trust me, an indicator never tells you to buy or sell. It's just doing math. You're the one that has to interpret the math and make decisions. Unfortunately, that's not really how people are taught, and because they're not taught properly. I'm trying to get you to understand so you can make informed decisions about your money. And I hope you appreciate that. Okay? So right now on this hourly chart, if all you're doing right now is looking at this kind of data, okay? We know this between here, price is overbought. And down here, price is oversold. It's not even opinion, that's just based on the data set. We don't spend a lot of time up top, we don't spend a lot of time at the bottom. So those are places you can look. It doesn't say it's going to, but you can look for a change in direction. And we got one. Now, inside of that, you can also try to eyeball, if you will, the average, which is just the middle. And if you're very, very bullish, you're going to want to stay above that and climb, steadily climb. Okay. Yeah, I was not joking about Harvard. No, I could be driving a Lamborghini, but instead I got a piece of paper back there, right above my head. But I did that to show my young children what it takes to succeed in academia. How hard I work, how many hours. They understand that you must have a ridiculous, sickening work ethic. And they're also learning that that comes with a consequence. It comes with a sacrifice. And they might think differently about it. They might say, well, Daddy gave me up so he can get a stupid degree at Harvard. They could certainly feel that way. And there'd be justification for it. But I hope in the end they feel like success requires hard work, whether it's school or a career or a marriage or a commitment to community. All these things require sacrifice. So I did a speech at Georgia Tech University. Oh, gee whiz, it must have been 8 years ago now. And I asked all these kids, these engineers and young leaders and everything, they're all handpicked to be there. And I said, how many people plan on doing something great with their life? And everyone, right? And how many people want to change the world? You know, and how many people want to make a massive difference in their community? Okay? And then I said, well, how many people here are doing homework 10, 12 hours a day? And how many people are doing this? And how many people are doing that? And how many people are preparing to do something great for their family, something great for their community, something great for the world? How many planning and preparing? And then I said, you know what? You need to start now. I said, there's never a convenient time. It's never convenient. It always requires sacrifice. It's always a little too much work. You're always taking on more than you can possibly handle. Okay? And I said, you need to start right here, right now. You want to change the world one day? I said, what'll happen is you'll get through this fabulous school of Georgia Tech, which takes up all your time. And then you need to get a good, decent first job so that you can start a good career. And that's going to take up all your time. And you're going to meet somebody beautiful and they're going to fall in love with you. And you're going to want to marry them. And you're going to want to reproduce. And you're going to have babies. And you wake up and you're 42 years old. And, well, you make a lot of money. You live in a nice house. You have decent kids. And you probably didn't change the world. So you need to start right now before it's gone, and it'll never be convenient. And by the way, I'm giving this speech in front of this audience, right, of hundreds of students at Georgia Tech, and I'm wearing a baseball outfit, full-on baseball uniform. And I said, hey, does anybody wonder why I'm dressed up like a baseball coach? I said, I'm a baseball coach in a Little League baseball team. And I was coaching the team with my son on the team. And I had to leave in the middle of the game. There's other coaches, right? And I had to get in a car. And I had to drive an hour and a half to get here and park. But I didn't have time to change my clothes. I had to do as much as I possibly can, give 110% to the baseball team to support my son, and then I have to jump in a car, drive all the way up here. It was a massive pain in the ass. We had to take 2 cars to the game, and I had to jump in the car, drive here, park, run through Georgia Tech campus, run into this room and be here to make a difference to you, tell you you can change the world, and it was incredibly inconvenient for me to do so. I shouldn't be here. It's too hard. I need to focus on things other than you or the world. I have to get through the baseball game. But I found a way to do both, to make a difference to my son, to make a difference to you. And maybe if I can get you, if I can inspire you to change the world, then it was worth it. So do you have what it takes? Can you start today? True story. Very inconvenient thing to go to Harvard for 5 years to inspire my children. Super inconvenient. But at least now they have a real education whether they go or not. They know what it takes and what it costs. It costs a hell of a lot more than money and time. Let me tell you that. Ernest, you go to metatraders.com. Yeah, cool. All right, so there's that. So we busted that down. We did some statistical analysis of the foreign exchange market. How cool is that? Did you guys click the like button and thank FX Street? Have you guys gone to tradersway.com and opened up a demo account? Just a demo. Just out of common courtesy. If you're learning or enjoying this webinar, it's just common courtesy to show your thanks that way. Costs you nothing but about 14 seconds worth of your time. You should be able to do that. Do what's right. Okay? Do what's right. Come on. What would your mother, how did your mother raise you? Okay, let's bust down oil. Thank you, Speed Racer. Thank you. Yeah, anything for you, FX trader, trading. Thank you, Emerald. I appreciate that. All right. So what do you want to do with oil? Well, let's start with, are you a bull or a bear? If you don't know that, okay, if you don't have an opinion on this, then that's your major problem. Okay? You don't need to be a right or wrong in my world. You just have to, I need to know where you stand. Okay? So I've been a bull on oil since it was zero. Remember those days? So let's try to put this together. Do I buy M3 if I'm a bull? Jordan wants to know what it costs. Why don't you go to fxbootcamp.com and click the button and find out. It's currently 78.6, 78.2. It's 76.4. It's almost 80% off right now. So what is the cost? I don't know. You'll have to go there, fxbootcamp.com. You'll have to click the button. Okay. So let's say Mohit and Michael say, no, that's right. I don't buy that. Cool. How about this? Do I buy M2? I'm a bull. Do I buy M2? Okay. Mohit and yeah, 3, 4, or 5 people. Cool. And at what day do I want to buy it? Ideally, if I could just make it happen, what day am I expecting to buy it? Yeah, market open Sunday, Monday. Cool. Which is right here. Cool. Nice. Let's move forward. Do I buy M3? Notice this is market open. The market just opened. Do I buy it? No. The market just opened. Do I buy it? Yes. The market just opened. Do I buy it? No. The market just opened. Do I buy this at M2? Cool. Now, today's Thursday. So there's Thursday. Let's say it's up here. And then Friday is a down day. And then Monday opens right here around 39. Do I buy that? Huh. I already know what I want to do on Monday. Sunday actually, but I already know what I want to do on Monday. How does that make you feel? Okay, let's reverse your opinion completely. You're a bear. Market opens at M3 on Sunday. Do you sell it? You're a bear now, not a bull. Cool. A week goes by. You're at M2. Do you sell it? New trader says, I don't know. I'm telling you right now. New trader, fxbootcamp.com. Insert a credit card and you will gain knowledge. I know it's a shameless plug, but at the end, it's the God honest truth. Okay. Okay, next thing. A week goes by. Sunday open. Do you sell it? You're at M3. Do you sell it? Yeah. A week goes by, the market opens at M2. Do you sell it? No, you don't have to, you don't buy because you're a bear. See, I have this clearly labeled. You're a bear. Bears don't buy. You don't stand for anything, right? If you don't stand for something, you'll fall for anything. You'll always buy and sell, and you'll be very mediocre. So don't say buy. You're a bear. I'm telling you, trust me, over the long run, your trading is going to be very mediocre because you don't know if you're a bull or a bear. Okay, so now, on Sunday, in the future, it's only Thursday, guys. It's only Thursday, and I'm a bear, and the market opens right here on the M3. Do I sell it? Now, because I have predictive pivots, I'm already doing pivots for next week. If this goes up and up and up, these will adjust. So right now it's 40.5, but by the end of the week, by Sunday, M3 might be way up here around 41. But whatever. I want to get the point, not the price right now. Yeah, and then if you put your, where do you put your stop? If you sell, if this was Friday close right now, where would I sell? Okay, I would sell here. Okay, this is dynamic because we haven't set that price in, but where do I put my stop if I'm a bear on Sunday? Because that's the burning question you have, like, oh, he's so great, but where would he put a stop? Okay? If you sell at M3, your stop is just above R1. If you buy at M2, your stop is just below S1. For example, if you were a buyer here, your stop would be just below S1. So you're like this one. You were a seller here, and your stop is just above R1. Okay? Okay? So now I'm telling you the time, price, and reason why I would trade my bias. I already have Sunday ready to go. Do you understand, like, most traders enter a market and they're like, what's up, guys? What are we doing? Are we long or short? I already have Sunday planned out. I'm going to destroy an amateur that hasn't done their homework and doesn't have a bias and is looking to do something. I'm going to destroy a trader like that. It's not even fair. But there's nothing fair about Forex. I've done more work. I deserve it more. Michael says double top possible. Well, sure, lots of things are possible. It doesn't matter. I know what I'm going to do. Okay, I'll look at the price. I know the exact time. Okay, I will look at the price and I will take the opportunity. And the cool thing about trading properly is you take the opportunity if it presents itself. You don't make up the opportunity. You take the opportunity and you put your stop. If I'm wrong, I lose. I lose some money. So what? I don't lose a lot of money, and I don't lose often. I lose. Don't get me wrong, I lose. But I win more than I lose, and I win bigger than I lose. So it's not a problem. So if I sell at M3, not because it's M3, but because when the market opened and I'm a bear, I had, let's say, a lower high, and we're at M3, and I put my stop now. Let's see, R1 is here. So I put my stop here. I'm golden. And if I get my bias right, if my bias is right on the direction, then more often than not, let's say at least 60% of the time, if my bias is right and the market is down, then at least 60% of the time, I'm right every time. Okay? And if I'm right 60% of the time, and my winners are bigger, and my losers, which is only 40%, are small, what does this mean? I'm very, very profitable, and I'm wrong 40% of the time. Now, if I can get this more realistically from 60, let's say 75%, I'm ridiculously profitable. The math works. The math works. Do you understand? You cannot fight the physics of money. This is the universal truth of profit. Everything else your last guru taught you is probably gobbledygook. Okay? The reason I teach, I preach to teach. The reason I do this is when I started trading Forex, there was no information. And quite frankly, I got pissed off. I was mad. I'm not joking. I was mad that this whole thing was a secret. And that I had to work so hard to learn these lessons. It wasn't fair and it made me mad. I would think of the old white guys at the top of banks smoking cigars, laughing about how much money they make in Forex. So this is what I do now. I sit around an old white dude smoking cigars all the time, but I don't laugh. I nurture. Because I also found once I quit my job as a venture capitalist and I became a full-time Forex trader, the loneliness and isolation was my biggest risk. And it almost destroyed my career as a Forex trader. So instead, I surrounded myself with other like-minded people. And I realized all the success I had in my life before Forex, and I had lots of it, came from because I surrounded myself with like-minded people. So I said, oh my God, I'm completely alone and isolated. I need to surround myself with like-minded people. And so about 17 years ago, I found FX Street. And I said, I can work with them and I will surround myself with other like-minded people, and I will do it by showing them everything I did and went through to learn how to trade Forex. I will share the secret, because if I don't, I will probably fail because I can't do it alone. This is very much a symbiotic relationship, guys. I need you, I need FX Street, I can't do this alone. So the only reason people swing on by my free daily webinars at Traders Way is because I tell you everything. Technically, fundamentally, psychologically, we cover a lot. Okay? So you can go to tradersway.com, open up a demo account. In the back office, there's a button to my free daily webinars. I work an hour and a half a day with people. I will take care of you and I will nurture you because it's good for me. Do you understand that? I will take care of you and nurture you because it's good for me. Not because I'm altruistic. Maybe I am. But I'm also doing it for myself. I'm as altruistic as I might be. I'm definitely selfish. So I've been doing this now, sharing the things I've learned almost 20 years. Still a Forex trader because I still love it. I'm a shellfish. So I hope it helps, guys. Because it's very much inconvenient. I have unbelievable amounts of work to be doing right now. Unbelievable. I will sit at my desk probably till midnight today. So to take 3 hours of my day and do a live webinar, it's no small matter, but I'm happy to do it. So let me see the time. I have about a half an hour left. I need a bathroom break. I need a coffee break. Please excuse me for about 90 seconds. Should be enough to get the special machine booted up. So 90-minute break. Talk amongst yourselves. What do you want me to discuss with you the last 30 minutes of our webinar? Technicals, fundamentals, psychology. How can I help you? Scalping, spot trading, swing trading, position trading. How can I help you the last 30 minutes? I'll be back in 90 seconds. Thank you for your patience. I know that was more than 90 seconds. I was just looking out the window, not this window, those ones, but there's approximately 50 geese, 50 in my backyard. It's a lot of geese, I'm telling you, it's a lot. Cool. When scalping sideways market, do you remain dedicated? Well, if anything's range bound, then you sell at the top and buy at the bottom. What do midpoints do? They're just the midpoint between 1 standard deviation and 2 standard deviation from the weighted mean. So they're just another form of support and resistance. Okay. So what I do is I simplify it and I just turn them into zones. So if I'm a bull on oil, I simply say, under current market conditions, if right now this drops down to 39.50 to 38.80, I would buy it. And I don't get caught up on central pivot M2 and M3 and stuff. I'm much more interested in, if I'm a buyer, I buy in here. If I'm a buyer, I buy in here. If I'm a buyer, I buy in here. That kind of stuff. Versus trying to memorize little numbers and tricks. I'm simply looking and saying, okay, this currently seems to be trending up, and I'm a buyer, so these are decent prices to buy. Not based on opinion, but by a statistical analysis of the trend. So if I was a buyer in here on Monday, I actually want to be up here by Friday. Now with NFP, it's an odd week and all that kind of stuff, but whatever. And so this might, if this does go higher, then because the stats aren't done yet, then this might rise too. Let's say I'll make it here. And so therefore, on Sunday, I might buy a dip to 40 and try to drive it up. Now, I also understand bears are doing the same thing, and bears are undoubtedly concerned about this top, and they're going to look at this and say, well, somewhere between 40.5 and 41, they're going to want to sell. And that's why I use stop losses. So if I'm wrong, I'll lose a little. Okay. Cool. All right, some gold. Gold. Lots of questions about gold. Let's look at gold. All right, gold. Let's start by looking at it this way. On the 15-minute chart, this suggests that the trend is still technically, not opinion, actually I should say statistically. On this chart with this amount of data, this trend is still technically bearish. Now you might be a bull, and that's fine, and I already explained why this was a bull in here. So you might be anticipating a change in trend, which is very cool. And you might want to start looking at the market, let's say, this way. This might be your plan, right? Oops, didn't mean to do that. Hang on. Okay, you might be thinking more like this. Cool. Right now, I don't think that really is what's happening. So even so, you might want to measure a smaller time frame. And you'll see in this case, this is much more, you know, sideways, let's say. So you might mark it up and say, well, as a bear, I might be a buyer down here. Or I mean, as a bull, a buyer down here. Or as a bear, a seller up here. Or if you're neutral, if you're just looking to scalp, well, you still know you want to scalp high at resistance or you want to buy low at support. So you kind of get yourself in a range there. World is yours says I like my risk reward concept. I love how it's my concept. Let's do it this way. When you win, no, when you lose 33 pips. When you win 99 pips. Okay? So if you lose 66% of the time, and you win 33% of the time. Wins, losses. Wins and losses, okay? You got that? How much money did you lose with these statistics? Your average loser is 33, your average winner is 99. 66% of the time you lose, 33% of the time you win. How much money did you lose? You're losing 66% of the time. 0. So now all you have to do is lose less than 66% of the time. So let's change this up. Your trading becomes better over time. And instead, you lose 50% of the time. Oops, 50% of the time. And 50% of the time you win. Now what? You're profitable. And half the time you're wrong. You're still profitable. That's it. You could actually lose 55% of the time and still be profitable. So whatever you're doing, people out there, whatever you're doing is either wrong or too complicated. You're following rules, step 1, step 2, step 3, or you're looking for a pattern and it tells you what to do. You're relying on an oscillator to tell you what to do. And the thing is, you're the one supposed to be making decisions. And when you get to the strength, when you have the internal strength to make a decision, your trading will improve. There's nothing on your chart that will tell you what to do. So it's a fallacy right off the bat. If that's what you've been taught to do, in my humble opinion, that's just totally wrong. George Soros is probably the most famous foreign exchange trader of all time. He doesn't even look at a chart. Never has. He broke the Bank of England. Had nothing to do with the chart. He didn't break the MACD. He didn't break the Bank of England because his MACD told him so. Do you understand that? Now, I love technical analysis, but when somebody says all you need is technical analysis and then everything is right there and all you have to do is that and everything's price has everything, so all you have to do is stare at your chart and you'll always know what to do. Well, then George Soros would be broke. Now, I love technicals. Oh my God, I love technicals. So don't get me wrong. Don't get all on a tizzy fit. Don't start tweeting me. But you should make decisions first. And then use technical analysis, statistical analysis, to enter your trades at prices that are good. Okay? Because if you know you want to buy low, the next question, there are two new questions. So let's do it this way. Number one, you know you want to buy low. Below. That looks bad. I'm going to redo that. I just can't do it. It's funny. It's hard to write and think. I can't multitask. So, okay, buy low. Okay. So number two, what price? And three, what time? Oh, I should probably, what price? Let me just type the whole thing up. And instead of when, I'm going to put what time. Okay? Okay? So, if George Soros, for example, pure fundamental trader, knows to buy low, so he just buys low. Done. He doesn't care about the time. He doesn't care about the price. He's like, buy low today, buy low tomorrow, buy low, buy low, buy low, buy low, or whatever. Okay? Great. Technical analysis then is at what price. So this chart measures price. And at what time? This part, right? This part of the chart measures time. And that's what these charts are all about. To help you decide what price and what time should you buy. But you already know you want to buy. And of course, you know you buy low. Even a child knows that. Buy low, sell high. Great. So you know you're a buyer and you want a deal. So what price is reasonable and what time do you pull the trigger? That's it. Is this price low? No. So now is not the time. He didn't trade the divergence of the central bank from the economy. That's not at all what he did. When you're talking about breaking the Bank of England, the economy had nothing to do with George Soros break. Okay. Okay. And most of you will know, but probably not everybody, but I actually sat on a board of directors with George Soros. Not that he told me his deep, darkest inner secrets, but I can tell you what he did had nothing to do with the economy. He didn't look at the jobs in the UK. He didn't look at inflation in the UK. He didn't look at productivity of the UK. It had nothing to do with the economy. But it was a sure bet. Indicators should only confirm decisions. No, they're statistical analysis tools. Okay? So they measure different things to help you make an informed decision. That's all. Okay? So like any human, we make decisions emotionally, and then we try to justify our decisions rationally. But don't fool yourself that you make rational decisions. No, you make emotional decisions and then you justify it using logic. Okay? Same thing kind of like George Soros, you could, if you broke it down like that way, fundamentally you're making emotional decisions. You're like, oh, this is bad for the dollar. And then you justify your entries and your exits based on logic and reason. Yeah, watch also, I would join my daily webinar. So open up a demo account at tradersway.com. MetaTraders just offers trading tools. That's all. Reb says, if we're supposed to be reactive. I don't think you're supposed to be reactive. That's what I'm trying. Cool. So this is the FX Street webinar. So you'll have to attend my daily webinar. This is a monthly webinar. So you're doing all that right now? Cool. I would highly recommend fxbootcamp.com. So everybody that's listening, FX Bootcamp has somewhere between 35 and 50 hours of training videos. Okay? Right now, they're almost 80% off. They're less than $400. When you pay for that and you sign up to have access to all the video training courses, you will also be invited to join my live trading group. Okay? And that's 400% off, or $400 off. So it's just 99 bucks a month. So if you want to learn more, there's no better time, is all I'm saying. I didn't know that was a no-no for yourself, but I don't live in Europe, so. Is there a time limit? Yeah, 1 year. Is it every single video? Yeah. Day trading, swing trading, fundamentals, psychology, technical analysis. Oh my God, there's just tons of stuff. I didn't think there was restrictions on a demo account. You can open up a demo account with a broker that's on the moon, but I'm not a lawyer, so whatever. I've never heard of such a thing that you can't open a demo account. Never heard of it, but whatever. I don't know. Well, you won't know how to scalp unless you know the other techniques. And then the funny thing is, by the time I teach you the other techniques, you won't want to scalp anymore. But I spent one entire year trading the 1 minute chart exclusively. So I can certainly do it, but there's no money in it, and it's a failed philosophy to begin with. Kind of like socialism. It's never produced anything on the long run. Nothing good anyways. But I'll prove that to you. So once you know how to make like a boring 300 pip trade, you'll never want to make a stupid 18 pip trade again, because it's not worth much money and it sucks up a lot of your time. So once you know how to trade properly, you'll scalp into all your trades, of course, but you will never take profit on an 18 pip trade. It'd be embarrassing. Okay, but yeah, I can teach you scalping. And you think I'm being facetious? I'm not. It's just, it makes no sense. Logically, if you do the math, once again, if you do the math, there's no way it makes sense. Okay, so for example, if I say if at least 50% of your trades are 99 pips, and you're like, Wayne, oh my God, 99 pips? That's such a huge winner. I couldn't even imagine that. Then you don't know how to trade. That's a day trade. It's not even a swing trade. 99 pips profit is like a failed swing trade and you feel bad about it. You're like, oh my God, I can't believe it. I'm taking 100 pips off this. Too bad it didn't work. Okay? 50 pips, sometimes it happens to you, but you're embarrassed. You don't even tell anybody. You're like, oh my God, 50 pips. Once again, you probably think I'm being facetious. It's not. No, I mean, if you know how to trade, you wouldn't have taken the risk if you were only going to make 50 pips. It's a little embarrassing. And it also screws up your stats because now, right, if you're trying to get, you know, half your trades are negative 33 and half are 99, but then you start taking 25, 50, 75 pip wins, you're killing your stats. And all of a sudden now you might be break even or not quite. You'll be a little bit profitable. And the numbers don't work because you're not letting your winners run. What is one of the universal truths? Universal truths. Universal truths. What is one of them? Right? Keep the losers small. Okay? But, and this is a big but, let winners run. So you, if you're a swing trader, you're going for 300 pips, not no pissy little 99 pip day trade. 99 pips might get you through the summer, but it's not going to make you a successful trader. 99 pips, right? I got 99 problems, but a pip ain't one. 99 pips. It's a pissy little day trade. Oh, you sold the pound dollar at London Open? Good. Amazing trade. Really? Right? I like VAR, Ernest. I like VAR. That's just me. I like variable spreads. So these are universal truths. So if you're trading scared, and people that trade scared have big losers and tiny winners. They can't get out of the loser because they're so concerned about their winning ratio. And they can't let winners run because they're like, oh my God, I finally got 50 pips. Out, 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 out. So failing traders, traders that are not successful, let their losers run and they have small winners. It's mentally deranged. So how about scalping? You might argue right off the bat, well, Wayne, my losers are small. Okay, but your winners are small. So how do you make money? You have, I don't know, 20% losers, 80% winners. But are they 99 pip trades? No. What are they? 25 pip trades. So you have to work hours and hours and hours and hours. And you're working 14 hours a day and you're not making much money. So that's the next problem. Then you're like, man, I got 80% winners, but I'm not making very much money. So what do? What's the cliche? You jack up the lot size. And then what's next? Bankruptcy. And then you're in a bar, drinking a cheap scotch, going, jingle, 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 jingle. I was a Forex trader once. Jingle, jingle, jingle. That's a tough racket. The brokers are hunting your stops, eh? Jingle, jingle, jingle. It's all manipulated by the central banks. Boop, 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 boop. Jingle, jingle, jingle. Loser. But that's not you, my friend. You follow the universal truths. The math doesn't lie. It's only statistics. It's only physics. It's only the universal law. And by universal law, I mean the same things that keep the moon going around the earth and the earth going around the sun. Is the things that bring you your wildest dreams or your worst nightmares. It's the same physics. You're not doing the right things. You might be smart enough, but you're not doing the right things. So what you need is just a little bit of knowledge, a nudge, someone to push you in the right direction and then give you support as you go on your journey of success. And perhaps I can be one of your guides, one of your mentors, one of your leaders, someone who's been through it too. Maybe I can help. And that's it. That's our webinar. So remember, FX Bootcamp is right now almost 80% off, fxbootcamp.com. The coupon code is on the order page. It's right at the top. It shows the coupon code. It takes it from $1,618 down to $382. $382. Less than $10 an hour for someone to teach you how to trade Forex right. Your time is worth that. My time is worth that. Okay? So, you can hire me directly. I'm $10,000 for 10 hours of mentoring, except I don't have the time and I don't need the money, so I'm not accepting people. I haven't for years. So that's your only choice. I can teach you everything I've learned in the last 20 years of trading Forex, being self-taught. Cost you $382 for my entire knowledge. That's it. You don't take that, I can't help you. Sorry. I do a live webinar every day. You have to become a client to Trader's Way. Visit tradersway.com, open up a demo account. Easy. And of course, another place for amazing resources and support is fxstreet.com. They have an amazing calendar. They have amazing webinars. They have amazing analysts. They have amazing research, and they have amazing people and the best moderators in the industry. So I'd like to thank our moderator. Thank you. I'd like to thank the leadership of FX Street. Francesc, for example, I've known for almost the 20 years that he and I have been around in this world called Forex. So I'd like to thank him. What else? I'd like to thank you for 3 hours of your life. I appreciate it. I know your time is valuable. And now I'm going to move on and I'm going to do my work, do my job. I will sit at my desk or a reasonable facsimile thereof. I might sit outside right now, actually, and have a big, fat, juicy, stinky cigar. I've already had 9 cups of coffee, or nine cappuccinos, actually. So I don't know if I'm going to do that anymore, but I'm going to do my work. I'm going to do my job, and I love the opportunity. I've been a businessman. I've been a scientist. I've been an investor. And around 20 years ago, I ran into this thing called Forex, and I'm still wildly, madly in love. Peter, I think it's 382. Yeah, I worked at NASA for a couple of years. I was an aviation research assistant at NASA at the Ames Research Center at Moffett Field, which is a naval base. So when I went to work, I would have to go through guards, you know, with, I think they were M16s at the time, right? So I'd have to go through an armed gate to get onto a military base. And then I would drive to the NASA research part, which is right at the end. So if you guys know Mountain View, California, that's where I worked at the NASA Ames Research Center. Okay. What separates me from the other gurus? Maybe nothing. Maybe everything at all. So, peace on earth. Oh, let's do it this way. La, 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 la. Got to turn my drawing tool off. Let's do it. Whoa, extreme close-up. Peace on earth. May the pips be with you. May your profits be above average. Happy Independence Day to Canada. Happy Independence Day to the United States of America. Greatest country in the whole world. Built by Americans, paid for by the Mexicans. Greatest country in the world. Yeah. So take care of yourself. It's the greatest. It's the most.